All right, let's talk about a company pretty much everyone on the planet uses, Google. We're going to break down an investment analysis to get to the bottom of one really important question. Is Google stock a smart buy right now?
So here's how we're gonna do it. First, we'll tackle that big buy or sell question head on. Then, we'll look at the good and the bad, the bull case versus the bear case. After that, we'll check out what the price chart is telling us, and finally, we'll explore two potential trading strategies you could actually use.
So, let's just jump right in. What's the verdict on one of the biggest stocks in the world? This whole breakdown is built around trying to answer that exact question.
To really figure this out, you've got to look at both sides of the coin, right? You need to weigh the reasons to be optimistic against all the potential risks. So let's start with the good stuff, the bull case.
So what's got investors so excited about Google's future? Well, this analysis points to three really powerful reasons for being optimistic.
First up, Google Cloud. And listen, this is not just some side hustle anymore. We're talking over $15 billion in revenue in just one quarter, and it's growing at a blistering 34% year over year. It has become an absolute profit machine for the company.
Okay, now this is where things get really interesting, especially if you're into trading. This implied volatility rank might sound complicated, but what it means in plain English is that options on Google stock are historically cheap right now. Like, they've only been this inexpensive about 9% of the time over the last year. That's a huge opportunity for buyers.
And hey, remember all that panic a while back? The whole ChatGPT is gonna kill Google's search thing? Well, it turns out those fears were kind of overblown. Google has woven AI right into its search experience, and its core ad business is still going strong.
Okay, so that's the sunny side of the street. But, a smart investor always looks at the potential storm clouds on the horizon. So let's flip the script and look at the risks that have some people feeling a bit cautious.
And this slide, wow, it just perfectly sums up the whole debate, doesn't it? Is Google's massive spending a genius investment in the future, or is it just burning a hole in their pocket right now?
The first big risk is the truly mind-boggling amount of cash Google is spending, over $90 billion planned for data centers and chips. They're in what you could call a CapEx war with their rivals, and while that might pay off down the road, it definitely puts a squeeze on their cash flow today.
Then there's what the insiders are doing. The analysis points out that the CEO, Sundar Pichai, has been selling some shares. Now, let's be clear, this isn't a five-alarm fire. It's more of a yellow flag, a little signal that maybe he doesn't see the stock price exploding upwards tomorrow.
And finally, there's this shadow that's been hanging over the company for a while now, the antitrust lawsuits. That constant legal battle with the government creates uncertainty and tends to keep a lid on its valuation, especially when you compare it to rivals like Apple or Microsoft.
Okay, so we've heard the arguments, the good and the bad. Now let's ground all this in reality and see what the market is actually telling us. Let's look at the price chart.
First, let's talk about support. The easiest way to think about this is like a floor for the stock price. It's a level where a whole wall of buyers seem to show up and say, nope, not going any lower.
And that floor, according to this analysis, is right around $300. This is what you'd call a screaming buy level, a price where the market has shown a ton of interest in the past.
All right, so if there's a floor, there's also got to be a ceiling, right? And that's what we call resistance. It's a price level that the stock just seems to have a really hard time breaking through.
And for Google, that ceiling has been pretty solid, right around the $329 mark. Time and again, it gets up to that level, and sellers step in to take their profits, pushing it back down.
Okay, theory is great, but here comes the big so what. How can you actually use all this information? Well, the analysis lays out two really smart potential plays.
So we've got two very different approaches here. One is for the investor who wants to play it safe, maybe generate some steady income. The other, it's for someone who's looking for more aggressive growth and is okay with a bit more risk.
So let's break down the safe play first. With this strategy, you could collect about $700 in cash right now. The trade-off is that you're agreeing to buy Google stock at that super strong $300 support level if it ever drops that low. You're basically getting paid to wait for a potential sale on a company you probably already like.
Now, for the more aggressive trade, this is a straight-up bet that the stock is going to climb back towards that $329 ceiling we talked about. And because options are so cheap right now, remember that 9th percentile thing? You can make this bet for a relatively low cost, just $450.
And here's the kicker. That small $450 investment could more than double. We're talking a potential return of around 120% if the stock just moves up a little over 3%. That's some serious bang for your buck.
So let's tie this all together. At the end of the day, yeah, the insider selling is a bit of a yellow flag, something to keep an eye on. But this analysis really presents two compelling traits. You have the sleep well at night income trade, and you have this mathematically excellent growth play. And the key to it all comes back to one thing. Google's options are just plain cheap right now.
So that leaves us with one final question for you. Knowing that the market is basically putting these tools on sale, which bet would you make? Would you play for Google's stability, or would you go for the growth?